Hi there, this is Alan Borthwick from Dux Financial Services with a KiwiSaver quick tip. It's coming up to the time of the year where your KiwiSaver provider is, or hopefully is, sending you reminders to make sure you don't miss out on the member tax credits. Now, what are the member tax credits? Well, every KiwiSaver year, which is from 1 July to 30 June, the government will match you half of what you put into KiwiSaver up to you putting in $1,042.86, which basically works out to $20 a week. If you put this much money in, the government will match you to half of that, or $521.43 into your KiwiSaver. If you don't do the full amount, they'll match you half of what you do put in. If you put in more than that, they'll still cap it to $521. Now, here's a few things to be aware of. Firstly, it's got nothing to do with tax. It's actually a silly name. This implies that you have to do a tax return, or it's got something to do with what you earned, or you have to have a job. Nothing of the sort. Anyone from the age of 18 to the age of 65 is eligible for the member tax credits as long as you put in the required amount of money. You don't have to do a tax return, you don't have to have an income. You could be on the benefit, you could be unemployed. So what do you have to do? You just have to make sure that you put in this much money. If you have a salary and you're earning at least $33,000 a year and putting in 3%, you're basically there. I think it's 33 to 34,000, you'll be fine. If you're self-employed or not working, you need to be putting in $20 a week, and all providers have an option for you to put in $20 a week through an automatic payment or direct debit. You could, the week before the end of June, put in the full lump sum if you want to. That's fine as well, and it gets you the free money. The main thing is to make sure you put this money in. Anyone from the age of 18 to age 65 is eligible for this money, and there's no reason not to do it, because there's a 50% return on whatever money you do put into KiwiSaver. And this money will continue to grow and provide money towards your house deposit, because it can be taken out for that, or towards your retirement. Now, if you're a Kiwi currently living overseas who has KiwiSaver, you can still put the money in and still get the tax credits. It's a little unsure about how eligible you are for this money, but if you're a tax resident, you should still be eligible. Either way, the government will still actually pay you the money. It's only when you go to do a withdrawal that they ask you to declare when you're living overseas, and they may take back any tax credits they've given you you weren't eligible for. Now, this isn't a big deal really, because at the very least you still get all the interest for all the years you had that $500 in your KiwiSaver, even if you have to give that back. So my recommendation is, if you're over 18 and under 65 and you can afford to put in the full $1,042, make sure you do, because it's going to get you that free money. Now, as part of Dux service, we let our clients know in May if they're on track or not, and then again in June if they still haven't done enough, just to make sure they don't miss out. That way there's no risk, because once we hit 1 July, you can no longer get last year's tax credits. So it's important to do it before the end of June. If you've got any questions about this, don't hesitate to get in touch. We're qualified to give you advice on this, and more than happy to. This is Alan Borthwick from Dux Financial Services with a quick tip about KiwiSaver.